Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, TGIF, everybody. I hope you guys have some great plans coming up, especially before school begins. And it's Friday the 16th, August 16th. So we got a couple of important economic news releases scheduled for today. We'll start with the housing starts for the month of July. So back in June, we had 846,000 new homes being created. The forecast for the month of July is 915,000, and it came up short. So still a good number if you look at it. We jumped up about 50,000, just not as hot as they were kind of projecting it or the forecasts were. Now we also have building permits for the month of July, so this will kind of show us future uh, buildings. And we had 918,000 for June. The forecast was for 953, and it came up again a little shy, but still, it's still increasing. So that's a good sign that it's going up. It may not be the forecast as hot as they were thinking, but still strong numbers right there. Now we got productivity for the second quarter. It was a negative 1.7% for the previous quarter. They figured Q2 would improve to about 0.7 and improved all the way up to 0.9%. So nice numbers right there. So we show a lot more productivity. And then last but not least, we got the consumer sentiment for August. We had 85.1 rating, and we figured it would kind of maintain that, and it dropped down to 80%, 80 there. So that could be a little worrisome right there because consumer sentiment is a high impact or weighs heavy on the what the data that the investors look at, and that's primarily because if people aren't feeling good about the economy, they stop spending, and if they stop spending, that could be put us back into recession and potentially lose more jobs. So that is something that we do gotta keep an eye on. These aren't bad numbers, but we gotta make sure that's not a trend going downwards. All right, folks. So let's jump over to the headline news here. Not much going on except for the stock market coming in mixed. Uh, the Dow was up a little bit today. They're not a lot of heavy trading because they're still kind of looking at, as we've been talking about the last couple of days, a lot of the Fed speak, the tapering of the quantitative easing data that's been coming in is below mixed. So they're concerned that if they taper off too soon, will it slow us down or is it strong enough to maintain itself? So that's the concerns that are out there. So let's jump over to the bond market and see where we're at. Now, another horrible day so far this morning. We're down to 98.88 on the Fannie Mae, down 57 for the day so far this morning. So obviously not great. So that brings us down for this entire week, down about 2.3 points. So let's say, again, if you put in layman's terms, so let's say you had a no point quote of 4% on Monday. That 4% will cost you about approximately 2.3 percent. That would be your cost for that effective today. So that just kind of shows you how much of a change that is. Now, roughly, in the interest rates, how that would fluctuate would be approximately pushing about, I would say, about 3/4% on the interest rate level. So you're probably seeing approximately about 3/4% a jump in interest rates this week from Monday till today. So obviously not a great day for the interest rates, but people are out still buying homes. Obviously, we're seeing, and we'll have to kind of see how the every day that home prices go up and interest rates climb up, that affordability climbs. So be prepared. When that time comes, when the affordability kind of gets to that point, and potentially could become a buyer's market at some point. When that happens, we don't know. But also keep in mind the stock market, even if the Fed does taper off a bit, stock market's due for a correction. We could see some of that money move back into the bond market, which could help us out. I don't know if we'll exactly see what we had seen in the past, but when it was up, when the 3.5 was all the way up to like 106, but we could see at least some slight improvement here. At least maybe improve us maybe about maybe bring us down to low fours or so for a time period. All right, but I think we're on the verge of seeing an increase of the rates starting to climb upwards now. All right, thanks a lot for your time. I hope you guys have a wonderful weekend. Next week we do have some important news, but Monday and Tuesday would be kind of, could be some Fed speak or what's on the equity markets. But it will be basically starting Wednesday. We'll have some important news going on Wednesday, which will be all important. In this case, would be the FOMC meetings, the minutes from the FOMC meetings. So everybody's going to want to see what they're saying, especially now with all the tapering talk, and see what people are, behind the scenes of what's going on in the meetings. All right, so stay prepared, and we'll catch you guys Monday. Thanks for watching again. Bye.